talk about one specific brokerage that has upgraded two stocks at least, SBI and Axis Bank. Vishal Goyal of UBS, Executive Director of Bank and Financial Research, UBS, joins in this morning to talk about that. Vishal, hi, good to see you in today. I'm going to start with the upgrade that you've provided for SBI as well as for Axis Bank. What is it predicated on? What is the target price? And what sort of asset quality concerns do you think SBI would have going forward, which you think might now be negated?
So I think the key thesis on which we upgraded SBI and Axis is improving asset quality, which I think would appear more clearer and more certain now that you have a strong mandate with government. So I think maybe the politically tough decisions also could be taken from here. So basically the economic recovery and therefore the asset quality improvement should happen faster than what we were anticipating earlier. And it's also an indication that we are clearly looking for a medium-term bullish environment for banking sector. So we are actually quite positive from here. From my coverage, I can tell you, out of like 18 stocks, only 3 stocks are neutral or sell, and everything else is buy. So what we are saying is, from medium-term point of view, things would be improving both on asset quality and then thereafter growth, and therefore we upgraded names.
Vishal, hi, morning. You also have PNB on your buy list. At least on this one, we still had some asset quality issues in the last quarter numbers. Do you think that's peaking out in the PSU basket and in stocks like PNB?
So I think we need to be really careful now in picking names and also about our expectations. So we are not expecting asset quality to improve in next 2 quarters for any of these names, because I don't think any government can do magic and start turning things so fast. But definitely over 12 months plus, we are definitely expecting the impairments to go down. Similarly on PNB, so the reason we have PNB as buy is actually super cheap. Despite being a large cap PSU bank, it trades at roughly 0.8 times forward book. And on further, if you look at their average valuations, they've been around 1.1 time book. And I think in next 12 to 18 months, all the PSU banks gets upgraded to or re-rated to the average valuations, as you see comfort on asset quality building. But again, let me warn you, I don't think anything is going to change in next 2 quarters. At least nothing dramatic should happen on asset quality improvement in the coming quarter for any of these banks.
Okay. So, Vishal, I just had a couple of questions. What is the average valuations for the PSU banks that you think they could possibly rise up to?
So I think for the pack, if you look at, we have only 3 names in our coverage. So for them, it is roughly 1.3, 1.4 times average. That is the average for them. And they are trading around 1.1, including SBI on console basis. So, okay. So basically there's a 20-25% upside purely if they reach average valuations.
Okay. The other question that I had is that for the next 2 quarters, you don't see any sort of asset quality improvement. So say for the next 2 quarters, the likes of say a PNB, which even Anuj brought up, might disappoint on asset quality even more than what it already has. That won't deter you at all, and you will wait for the next 2 quarters and then make any sort of rating difference or rating changes?
No, I think let's be very clear while investing. What is the time horizon we are looking at? So I am looking at 12 months plus, and therefore I don't think even if next quarter is a disappointment, we would be changing our view on the same, because we know and we are building that already in. But for example, if somebody is kind of trying to trade this rally, especially on the PSU side, those people could get disappointed because the stock could actually correct. In a bad result. But I think what we are saying, it will be an opportunity to buy, because I think this is the beginning of the bull phase for banks.
Vishal, you got a sell on IDFC. What's that predicated on?
So it's actually about the absence of growth for them, actually, if you ask me, because of the banking license. So they will more likely underperform, I would say. So it's not that they will not go up in absolute terms, they might. But I think when I look at names like Axis, ICICI, or even PSU banks, they will be able to outperform the name. That's the call.
Okay, Vishal, I'm going to take that point forward with regards to IDFC. Though it's not going to be an NBFC anymore in the coming future, there is an argument which is put out by different brokerages or banking analysts saying that the valuation gap between NBFCs and banks could possibly widen because NBFCs could be more susceptible to asset quality concerns as opposed to banks. Would that be an argument that you share as well? And this would be with the exception of, say, something like a PFC as well as REC, which have rallied significantly and have significant exposure to the power space, which will see that sort of upside based on regulation changes.
I don't agree with that argument.
Okay.
Because if you look at, first of all, the whole NBFC pack is so diversified that you just can't color them with the same, paint them with the same color. Because one, you have mortgages, so there is no asset quality issues there. So there was never asset quality issue, and there is no visibility there also of asset quality deteriorating. Second, you have CV financials where asset quality pain was there, and in fact is still there for the likes of, let's say, Shriram we cover. And that should be, in fact, be reducing going forward. That's the view we have. So I don't think, first of all, the asset quality of NBFCs, if I include even mortgages and CV financing, would deteriorate from here.
Okay, fair enough. I also noticed that you like Federal Bank, and there have been multiple brokerages that have actually written on Federal Bank in the past couple of days itself. Your view on the same?
So I think if you look at our mid-cap picks, I mean, we like Federal Bank and even Yes Bank for that matter. The Federal Bank story is very, very simple. It's 15% tier 1, so very well capitalized for next 3-4 years. Would be generating 15-16% ROE as per our estimates. Asset quality issues seems to be behind. New management has done a lot of good work on the ground, on risk management, on deposit franchise. So it's like one of the top mid-cap pick for us among banks. And valuations are still 1.1 time book.
Vishal, finally, HDFC Bank, of course, there's the issue of, FI holding and how much FIs can buy in that one. But what's your call on the stock?
I think HDFC Bank on absolute terms still makes sense because it's actually underperformed. It's trading at 3.1 time book, much you can say around 10-15% below its averages. And if the underperformance is because of MSCI and we don't see any fundamental issues in the bank, I think it's a good absolute buy. It might underperform the beta names, but still I think on an absolute basis, if somebody wants to have a low risk stock, I think HDFC might still make sense.
Okay. Vishal, and what about the enabling resolution to raise 10,000 crores?
No, I think company would be better to discuss that. But I think my view, I mean my personal view on this is it is a contingent kind of resolution. It's just an enabling resolution for, let's say, the FIPB doesn't approve their increase in limit. So maybe they will raise capital. I don't think the tier 1 is low for them. I think they are still at a decent level. So I think it's just an enabling resolution in my view. It may or may not actually fructify.
Okay, Vishal, we leave it at that. Thanks very much for joining in. So that's the view coming in from UBS on the financial space for the market.